Hey everyone, welcome back to the channel. Today, I want to take a minute to talk about what I think is one of the most interesting kind of case studies from the pandemic, and that's Peloton. I'm sure most of you are familiar with Peloton. It's the at-home treadmill bicycle company with a screen, and you stream live classes and you pay a monthly fee, and their stock has kind of gone all over the place throughout the pandemic. But I think it's a really interesting company and definitely one that's been kind of interesting from the start to follow. Let me hop over real quick and show you their original Kickstarter, which I think is pretty fascinating that they started on Kickstarter. So one second here. So here's their original Kickstarter back in, I think it was probably 2013, 2012, somewhere in there when they had this, but pretty interesting. They raised $300,000. I think they're probably one of the most successful Kickstarters of all time. Them and Pebble. I think Pebble sold or something like that and has been discontinued or something, but Peloton's still around. It's a public company now, trading close to $10 billion. Pretty fascinating to kind of see the history and the growth of this. But what's really fascinating, I think, is if we go to their stock price, and let's go to the full history here. They IPO'd back in, when did they IPO? 2019. Actually, let me just do a 5-year. There we go. I IPO'd in 2019 at, what was this, about $30 a share. Is that $25 a share? $27 a share. So close to about the $10 billion valuation they're at today. And we can kind of see, right, they kind of go up a little bit, doing pretty well at 35, and that kind of drops. Pandemic, everyone panics, right? Big sell-off, they're down to $19 a share. And then pandemic hits and everyone realizes, oh, wait, everyone's going to be buying bicycles for home. Yeah, this company's definitely undervalued. Let's shoot the stock price all the way up to $162 a share, which is like a $70 billion market cap for a company that sells bicycles for $2,000 with the screen. Absolutely insane, right? And the only logical thing is for the stock to come back down, which it took a little bit of time, had its ups and its downs, and then this year, October, November, December, into January, right? And then we get to where we are today at $30 a share, about a $10 billion market cap. So the stock's gone all over the place. I don't know what investors were thinking during the pandemic that their run would last forever, right? Their sales were doubling annually. I get that. They were selling a ton of bikes. They couldn't meet demand. We're also in the middle of a pandemic. Gyms are closed. People are, want to work out from home, and this is a great alternative to that. Very easy, but also there's a large kind of price point to enter. It's a $2,000+ bicycle to be able to work out at home, and then on top of that, layer in the fact that it's $40 a month, which isn't exactly cheap, and your target demographic is like upper middle class individuals in the United States that prefer to work out at home versus the gym, but also have room for a bicycle in their home. So if you're living in a major city like New York City, even if you are kind of like upper middle class, but you live in a 1-bedroom, you may not even have room to actually have a Peloton, right? So I don't think their target market is as big as investors were putting it at when they were valued at, $70 billion. But let me hop over into my DCF and we'll take a look at that, and I'll walk through some of the historical financials and then what I think is a fair valuation for today. So first, let's just talk through some of the historical numbers here. So 2018, right? They IPO'd in 2019. So 2019, they're coming off, doubling revenue, a little over doubling. Things are looking really good. Great business model, a lot of excitement from investors. If we scroll down here, we have some numbers. Right, they went from 240,000 to about 500,000 connected fitness subscriptions. Bikes sold, doubling the number of bikes they're selling almost 500,000 bikes a year. Right, goes into 2020, great. Things are looking good. You have a quarter of really strong sales when the pandemic hits. Just for note, their fiscal year ends in June. So right, they had a Q4 technically in 2020, which is when the pandemic started, and sales probably started to ramp, and they see that and they're like, great, let's start investing for the future. They announced this plan to build a manufacturing plant in Ohio. They're increasing R&D like crazy. Their sales and marketing, their G&A is like doubled, right? They're paying Ryan Reynolds to come do marketing promos for them all over the place. A lot of probably mistakes were made as well, but you can see like we're still not even profitable. Net income, we've had a loss every year, but in 2020 we were close, and if we didn't expand like crazy on some of the stuff, right, we probably could have actually turned a profit this year, right? If you left R&D at like 100 million, G&A didn't expand as aggressively, you could have actually eked out a profit, which would have been great. Instead, they're planning for this continued growth, right? We're going to continue doubling the number of bikes we sell every year. We're going to go from selling 700,000 to 1.5 million. We're going to sell 3 million bikes next year. I mean, right, you're not going to sell 1% of the U.S. a bicycle every year. Like, that's just not practical. There's not a big enough market in the U.S. for that. A lot of the people that have already bought your bikes are kind of your core market, and you're going to get a few more people, but at this point, their market's very saturated. So 2022 comes around, right? Q1 sales are down. Q2 sales are a little bit up from Q1, but on a year-over-year basis, they're down almost $100 million. So similar trends we're seeing kind of across the board. We'll see how Q3 and Q4 play out. And something to note here even is their Q2 is the holiday time, right? So all the Christmas sales, so all of that's baked in there. But they're just bleeding cash, right? Massive net loss. They expanded like crazy. Sales and marketing, G&A, all of this cost is just up like crazy. So what happens recently, they replaced their CEO, their founder. He'd been meaning to step down, or so he claims. Who knows what the real situation is there? Who really cares? He's moved to a board advisory role. And they brought in the old, I think, CFO of Spotify. So someone who has a lot of work in the high growth subscription-based business, which I think is great for the turnaround plan. And they're going to cut operating expenses by $800 million, and they're going to turn the ship around and try to become profitable in the next couple of years. So that's what I baked in here. You'll see, sales I have kind of staying flat, basically, and then just slow growth like 5 years from now once they kind of stabilize, figure their stuff out, launch a couple more pieces of equipment, kind of sell a second piece of equipment to their current owner, something like that. Margins, nothing too crazy going on with margins. Subscription is actually pretty good margins, so that'll stay the same. They're going to bring down the connected fitness costs. I think what was happening here, and they talked about a little bit, is basically they were paying a ton for like overnight shipping bicycles on airplanes and absorbing the cost and all sorts of crazy stuff. So I think, they'll get their manufacturing and everything figured out. Shipping delays should go away once kind of COVID resolves. Costs will come down there as well, and we'll go back to more historical margins that we saw in 2019 and 2020, as opposed to the crazy ones in 2022. G&A has to come down significantly. They've already committed to cutting $800 million for next year, so we'll see if they can actually do that. But trying to get back to historical rates, closer to the 2021 percentage there. And, with all of this, right, CapEx has got to be cut too. They're spending too much there. But with all that happening, we get a valuation of about $6 billion. That's a 12% discount rate. I think Peloton's a pretty risky company, a big turnaround that has to happen. And, if you sensitize from 10 to 14%, you get about $5 billion to $8 billion. I think that's a pretty fair range for Peloton. I think when the market first pulled back, they were in kind of that $8 billion range. I think time will tell if they can actually turn this around. I think something to note, though, is they have incredibly low churn. It's a phenomenal product from people that own it and use it. They love it. I have a Peloton. I love it. Use it all the time. But I think a lot of their core market has already been tapped. So unless if they can continue to create different products at different price points to engage other consumers, it could be a hard sell. I know they're working on I remember Xbox had the Xbox Connect, which was I think that's what it was called. It was like a camera that attached to your TV, and then you play games and it would track your movement. They're creating something like that. That's like a lower price point at like $300 or $400. It's kind of gimmicky. I don't think that that's going to be what's the catalyst for them continuing to drive sales. I think they have to come out with products consumers want, that their current base already has, that will be kind of a bolt-on purchase, right? I think the treadmill and the bike go well together. If you come out with like a mirror type thing, right, that could be interesting for individuals. Come out with a rower, something like that, right? I think you might be able to move in that market. Come out with dumbbells similar to those that Bowflex has. I know those were very popular during the pandemic. But, right, you basically create this home gym environment where it's all Peloton connected, right? That could be the future. But it's still a pretty narrow market for folks that have room for a home gym that costs $30,000 once you buy all the equipment. So anyways, I think it's a great company. I think it's a great business. I think they create a wonderful product that a lot of people love, but I think their market's pretty saturated and tapped. I think if they pulled back to $6 to $7 billion, wouldn't be surprised. They'd be fairly valued. Obviously, there's probably a better chance of them going to 70 billion again, as opposed to going to 5 billion, just because of how crazy the market is on all these pandemic darlings, right? If you have another announcement of a huge surge of COVID and everything shutting down again, Peloton will spike regardless. That's just the nature of how stocks have been moving lately. So will definitely be interesting to watch and see. I think the turnaround will be fascinating to see how they can perform. Great margins on the subscription business. I really like the business. I really like the product. Don't like the stock price, and I don't like the volatility of the stock. But it's definitely been very fascinating and interesting to watch. So, yeah. Anyways, thanks for tuning in. Let me know if you have any questions or comments, and look forward to making more videos. Thanks.